Hi everyone, as you can see here I have a chart of Amazon posted up immediately. That's because after hours this stock is down 10%, which is going to give me shitty fills on my leverage inverse ETF positions that I'm going to put on as a protective barrier against all of our long positions. Now I have to admit, today we had way more of my holdings go up than went down. However, in the ones that went down the most, I did not like what I saw today. So before we really go into much, let me go ahead and go over our sells. So we'll start off with the smallest ones. LJPC. There's not a single thing wrong with this chart. What is wrong with it, however, is that it did not move higher immediately. So what I wanted to see from LJPC was something very simple. I wanted to see LJPC either stay flat, which it kind of did, or go higher immediately, especially since it's so early and it's not like this current consolidation pattern is like 10 or 15 days long. It's only about 6 days long as of yesterday's signal. So since it didn't stay flat, basically be down 1% or less or go higher, it's a 25% sell no matter what, just like Kang was this morning. And now Kang is a obvious full sell. Two reasons. It's closing below the 18, I think 66 was that final one, 1865 cut loss level, and the other one is that lost green bop, and that was part of the catalyst. And so Kang is a full sell, but these catalysts just keep on happening. LIQD was along because of the catalyst of green bop. Green bop is immediately switched to red bop from yellow. That means our catalyst is gone. 50% sell immediately. This leaves us with a very, very tiny position left. It's basically all about now pretending that I run billions of dollars and to see how this little amount would work. I swear to God, folks, I hate operating as a hedge fund, especially since I'm not a hedge fund. But in this tape, in this QE environment, it is dangerous to operate with heavy positions in one stock. Using my end-of-day methodology, it's just too dangerous. Trend following is still dead, so you got to be careful. So the mere fact that LIQD is up today, I don't care. It lost its green bop, and it didn't just use it to yellow-red. That's it, 50% sell. Also, Colgate, barely closing below the 50-day moving average, and I mean barely. It's still above the previous low the day before, and I swear to God, every instinct says don't do anything. However, since the tape is trying to be the way it is, and since the earnings aren't out yet, they're still out the 31st, I'm going to consider this weakness to be an early harbinger of worse things to come. So just to be safe, CL 25% sell of our position. No more, no less. And now even if it sells off below low average volume, it won't be a sell until it eclipses the 67.97 low. And normally, if we're trending higher, today's session happens where we basically close at the 50-day moving average. I don't sell any. But since we are down and the market's looking funny, 25% sell. And now that leaves me to my full sells. AWH, we still have a small gain, but do you see that candle today? That completely screws up this chart. I'm no longer interested in it. I am out. Kang, I already told you, lost its green bop. I am out. ILMN, huge mistake trade on my part. The damn gap up was not strong enough. However, I was awake early morning, and after the early morning, it immediately broke out higher, and I thought that everything was just going to be fine on this stock. Bad, 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 bad call. ILMN, ugly reversal and heavier volume. Full sell, not even going to mess with it. It could probably bounce here and ride to new highs. I don't care. I went out. Remember, I went out of BIIB, and that also cost me, so we'll see if ILMN does the same. PDFS closing below the 50-day moving average on heavy volume. That's it. Earnings are coming right up. We're going to take the rest of our gains and run away. And then RSE. Why is it a full sell? Because now that it's lost yellow bop, I no longer care about my final cut loss level of 1780 by it losing that green bop. 1732, the low a day of our signal date, is my final cut loss now. Closing at 1731, yellow bop. Goodbye, RSE is out. Earnings are coming up. So with all those sells, it makes it hard to be super bullish here. But there's tons of stocks that made good moves today. JMEI broke out. AMBA is creating a nice consolidation pattern. So is Nielsen. OVTI, WLFC, very, very nice bases. QUNR, creating a nice consolidation. TIFF, SRLP. So as you can see, we have a lot out there. Tesla, MU. There's just plenty of opportunities. The thing is that going along any of these now ahead of earnings is seriously very, very dangerous, especially when we see what's happening to Amazon after hours. But as you can see with all these high quality stocks I'm putting up, we have a ton of stocks setting up into possible buyable gap up patterns. Will it work though? I don't know, man. MCK has worked. Facebook shook me out and work. MCK shook me out and work, and BIIB shook me out and work. But at the same time, we have stuff like AWH, ILMN out there. Amazon, I saw this leading stock CWEI do poorly today. So it's really not, a crystal clear market out there. It's still very choppy despite the indexes being nearing new highs. The higher volume today with the basically the price closing slightly below where it opened, that's churning. So this is a day of churn action. And on the NASDAQ, volume was not only above average but higher than the day before. That's more churning action. And then look at the IWM, the Russell 2000 ETF. It has red bottom now. So whenever you combine this with just weakening internals, which aren't shown here, let me just go ahead and go back to this one. You can see here, if we just look at the QQQ, relative strength is not at a new high while price is. Money stream is not at a new high while price is. MACD is not at new highs, and TSV is neither at new highs, and short term both are moving lower. That's not bullish, guys. NASDAQ, same thing. Relative strength, money streamline, nowhere near new highs. TSV, MACD, nowhere near new highs, and they're trending lower. Once again, not bullish despite being up here at the highs. Russell 2000 looks like it's trying to bottom out here, but as you can see, it still ain't at these low points that it just had recently in February and April, so we could still have further downside. Overall, though, longer term, once again, look at the relative strength line and the money stream, MACD and TSV line. Lower highs while the index is up here at new high ground. Now the only thing is that the NYSE, when we look at the money stream, we can see everything's fine. But once again, NYSE, that hasn't shown relative strength since October. TSV and MACD, once again, downtrending overall. There isn't really anything bullish there either. And the NYSE is very similar to S&P 500. You see the S&P 500 trending lower, TSV trending lower, MACD, money stream is strong, but nothing great. So we have some problems out here overall in the market, and it's hard to be extremely bullish or think that we have seen the lows and you're just going to rip to new highs. It is always possible that we can build out these patterns and break higher. But staying on this theme of the internals and how they look, I want to also bring up how many of those stocks that I just showed you have positive internals going into earnings. OVTI does. Not only does OVTI, but WLFC does. And then recently in a late scan, I saw HR kind of does. But even then, HR's MACD is overall in a downtrend, and so is TSV. I know there's a lot of blue in here, but I can see it, and I apologize if it's difficult to see. But trust me, it's downtrending. And even though short term it's slightly uptrending, it's nothing that great bullish. You didn't see BOP really surge today. The relative strength line leaves much to the imagination. So overall, once again, not a great pattern. FES is another great stock that I actually like on the short term. You can see internally TSV, MACD, relative strength, money stream, BOP. Everything's great. Everything looks wonderful. But today's move does not come with a pocket pivot point signal, and this little consolidation, like tight base right up here, this 1, 2, 3, 4, 5 day consolidation, that's not long enough for me to go long a stock like this in this kind of market. If this base is 2-3 weeks long, once again, and then you also have max green BOP during the entire base, then you have today's move. Not only would that be a buyable signal, but it would also trigger another one of these upside down V spikes that you see, which are pocket pivot point buy signals. So overall, there's nothing for me to do on the long side. Everything's too risky, especially with the tape. So on that note also, SOXS gave me a great ad signal yesterday, but damn it, man, I'm just in a funk with picking stocks, and this is why I keep telling everybody cash is king. I am a master at admitting when I'm wrong and cutting losses. I have no problem immediately taking something long and then selling it off immediately when I'm wrong. And at the same time, though, lately I've been a master at missing out on stocks. I passed on CAF, that came back to bite me in the ass. I passed on going short CXDC back in June. That came to bite me in the ass. And I didn't take SOX S signal yesterday because of all the long signals, when my brain should have told me with that many long signals, you should have hedged it. If you were going to take all those longs, I should have hedged it with this position. And the mere fact that, that's what happened, but it didn't explode high. That's what I did not do, is kind of bothering. But we're getting an ad signal, but once again, everything's blowing up in my face again tonight, just like my shitty fill with BIS this morning. I'm now having a gap, the market sell off big after hours, so we're going to get another shitty fill in SOX S. We're going to get another shitty fill in SRTY. So if you are not heavily long here and you're instead just heavily cash, don't take these trades. Stay in cash. This is a very choppy market, and this is what QE does. And this is what happens when basically you have an uptrend where volume is below average. And now that we're seeing higher volume again, what's the market doing? It's not doing much. It's chopping around. That should be another big hint that this is churning and not bullish action. But we'll see how it ultimately resolves itself. If we have an ugly Friday, I think that this market wants to retest its 200-day moving average for sure. But how quickly things can fucking change in this market. It doesn't bother me. I can see how it can frustrate new traders, but I've been saying it for weeks now. Cash is king here. People that are psychotic like me that have to take every freaking signal they get, at least we can cut our losses fast and not let us hurt us. But, this is why we take every signal, because it seems like whenever I don't take a signal, WBAI also, I pay for it. WBAI gave me a signal back here. I didn't take it. The next day it's up 12%. What are you going to do? It's a QE tape. Got to trade small or not at all. Aloha.